Before we begin, a quick legal disclaimer. The content of this video and this channel is for informational and entertainment purposes only. It is not financial advice, investment advice, or a recommendation to buy or sell any securities, Bitcoin, or other financial instruments. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. The views expressed are my own and do not reflect the opinions of any affiliated entities. Now, let's get started. Hello, and welcome to Magic Money Macro. I'm Steve, and I am absolutely pumped to launch this journey with you today. If you've ever wondered how the world's most powerful central banks pull the strings behind interest rates, inflation, and the price of everything from your groceries to your house, if you want to understand why governments keep spending trillions they don't have, if you're trying to figure out whether the stock market is in a bubble or about to blast off again, if you're fascinated by the explosive growth of artificial intelligence stocks, or if you believe Bitcoin is the hardest money ever created and want to stay ahead of its next move, this is exactly where you belong. Magic Money Macro is a weekly Wednesday show that connects the biggest macro forces on the planet to the assets you actually care about. Every single Wednesday you'll get a fresh, no-fluff breakdown of what matters right now and what's likely to matter in the weeks and months ahead. No ivory tower theory, number 80-page white papers, just clear thinking, real charts, and actionable insights delivered straight to you so you can make smarter decisions with your capital. So let's walk through exactly what you're going to get every week. First pillar, central bank policies. We're talking about the four giants: the Federal Reserve, the People's Bank of China, the Bank of Japan, and the European Central Bank. These four institutions control the price and quantity of money for roughly half of global GDP. When the Fed hikes rates by 75 basis points, tech stocks can drop 30% in a quarter. When the PBOC unexpectedly injects liquidity, Chinese property developers and commodity prices can rocket overnight. When the BOJ quietly expands its balance sheet again, the yen weakens and Japanese exporters cheer. And when the ECB flips from hawkish to dovish, the entire European banking sector can swing violently. Every week we'll dissect the latest statements, the dot plots, the press conferences, the meeting minutes that get released 2 weeks later, and, most importantly, the data the banks themselves are watching. We'll translate Fed speak into plain English. We'll show you which sentences in a 3,000-word statement actually moved markets and which ones were pure noise. We'll track forward guidance, balance sheet runoff, quart versus QE, repo operations, swap lines, everything that affects the global cost of money. Second pillar, fiscal policy. Central banks control the printing press, but governments control the spending faucet, and right now that faucet is wide open almost everywhere. The United States is running deficits that would have been unthinkable 5 years ago. China is rolling out targeted stimulus packages while trying to avoid an all-out property collapse. Japan continues to fund roughly half its budget with fresh debt. Europe is debating joint borrowing again. Every one of these fiscal decisions ripples through bond yields, currency markets, commodity prices, and ultimately equity valuations. We'll follow the big packages: the US CHIPS Act, the Inflation Reduction Act, China's local government special bonds, Japan's supplementary budgets, the EU Recovery Fund, and we'll connect them to the specific sectors and assets that benefit or get crushed. We'll also keep an eye on debt to GDP ratios, because at some point markets stop believing in magic money trees. Third pillar, investor sentiment surveys. Markets are not machines. They're auctions driven by human fear and greed. Extreme positioning has been one of the most reliable contrarian indicators for decades. When the AAII bullish reading spikes above 60%, crashes often follow within months. When Bank of America's Global Fund Managers Survey shows zero cash and maximum equity overweight, that's usually a great time to raise cash yourself. We'll track the classic surveys: AAII, Investors Intelligence, NAAIM, B of A, Citi Panic, Euphoria, CNN Fear and Greed, and we'll layer in real-time sentiment from options markets, put, call ratios, dark pool indexing, and social media flows on platforms like X and stock twits. You'll see exactly when the crowd is most euphoric and when panic is setting in, because that's usually when the best opportunities appear. Fourth pillar, technical analysis of major indices. Fundamentals tell you what should happen. Technicals tell you what is happening right now. Every week we'll put the S&P 500, Nasdaq 100, Russell 2000, Europe's Stoxx 600, Japan's Nikkei 225, China's CSI 300, and emerging market indices under the microscope. We'll look at monthly, weekly, and daily charts. We'll track moving averages, 50, 100, 200, Fibonacci retracements, trend channels, volume profiles, relative strength, breadth indicators like the advanced decline line and new highs, new lows, and momentum oscillators, RSI, MACD, stochastics. We'll highlight key support and resistance zones, potential head and shoulders patterns, cup with handle breakouts, death crosses, golden crosses, whatever the charts are screaming at us. And we'll always show you the risk-reward setup so you can decide if a trade is worth taking. Fifth pillar, AI stocks. This is the most important technological revolution of our lifetime, and it's happening in public markets right now. Nvidia has gone from a $30 billion company to over $3 trillion in less than 5 years on the back of AI chip demand. Microsoft, Google, Amazon, Meta, and a dozen smaller players are pouring hundreds of billions into data centers and large language models. We'll track earnings, CapEx guidance, inference versus training demand, power consumption constraints, new architectures, Blackwell, Rubin, next-gen TPUs, and regulatory risks. We'll separate the real compounders from the hype and show you which names are actually cheap on a price-to-growth basis and which ones are priced for perfection. Sixth pillar, Bitcoin and Bitcoin-related equities. Bitcoin is the only truly scarce asset in a world drowning in fiat money. Its fixed 21 million supply cap makes it unique. Every week we'll look at price action, on-chain metrics, exchange outflows, long-term holder accumulation, hash rate growth, difficulty adjustments, MVRVZ score, pool multiple, reserve risk, ETF flows, institutional adoption, regulatory headlines, and macro correlations. We'll also cover the publicly traded companies that live or die with Bitcoin, MicroStrategy and Michael Saylor's massive debt finance Bitcoin treasury strategy, the major miners, Marathon, Riot, CleanSpark, Iris Energy, and the infrastructure plays that benefit from Bitcoin's growth. When Bitcoin enters a new bull cycle, these equities often outperform Bitcoin itself by 3-10 times on the upside, and they can crash even harder on the downside. We'll help you navigate both. This 6-pillar framework gives you a complete 360-degree view of the forces moving markets right now. Central banks and fiscal policy set the macro weather. Sentiment tells you how the crowd is positioned inside that weather. Technicals show you the exact levels where buyers or sellers are likely to step in. AI stocks are the growth engine of the next decade. And Bitcoin is the asymmetric hedge against monetary debasement. Our videos drop every single Monday, so you start the trading week with clarity instead of noise. Why does any of this matter to you personally? Because everything we just covered ultimately determines the purchasing power of your savings, the value of your portfolio, the interest rate on your mortgage or car loan, the price of gasoline, and even the stability of your job. In 2022, the Fed's aggressive hiking cycle crushed growth stocks and sent the ARK Innovation ETF down 80%. In 2020-2021, zero rates and trillions in stimulus sent Bitcoin from $5,000 to $69,000 and turned Tesla into a $1 trillion company. In 2008, central banks and governments learned they could print their way out of almost anything, and they've been doing it ever since. Understanding these forces isn't just interesting, it's one of the highest ROI skills you can develop in today's world. Let me give you a couple of real-world examples of how powerful this framework is. In March 2023, almost nobody expected the Fed to pause rate hikes by mid-summer. But by watching the Fed funds futures, the 2-year yield inversion, and the rapid decline in regional bank stocks after SVB collapsed, we could see the tightening was breaking something. Sure enough, the Fed paused in June, and risk assets exploded higher. In late 2021, Bitcoin was trading above $60,000, but on-chain data showed massive exchange inflows from 2017-2018 holders taking profits, the highest leverage in history, and funding rates at extreme levels. That was a screaming sell signal. 3 months later, Bitcoin was below $20,000. In 2019, almost every sentiment survey showed record bearishness. The AAII bulls were below 20%, fund managers held record cash, and the put-call ratio was spiking. That was one of the best buying opportunities of the entire bull market. These aren't lucky guesses, they're repeatable patterns that show up again and again when you know where to look. So here's how to get the absolute most out of this channel. Block off 10-20 minutes every Wednesday morning. Watch the new video before you open your trading platform or check prices. Start the week with context instead of reacting to headlines. Keep a simple trading journal. Every time we highlight a key level on the S&P 500 or Bitcoin, write it down. Track how price reacts when it gets there. You'll train your eye faster than you think. Build 2 watch lists, one for macro-driven assets, indices, bonds, commodities, currencies, and one for high-conviction individual names, AI leaders, Bitcoin proxies. We'll give you the triggers each week. Use the comment section and X as a real-time discussion forum. If you see something important over the weekend, China cutting rates, a big Bitcoin whale moving coins, a blowout Nvidia pre-announcement, drop it in the comments. We read everything. Turn on notifications. Markets move fast, and sometimes we'll drop quick midweek updates if something massive breaks. This channel only works if we build a real community of sharp, independent thinkers. Every week we'll have a community spotlight segment where I read and respond to the best questions and insights from you. Want a deeper dive on the ECB's TLTRO repayment schedule? Ask. Want me to run the numbers on whether MicroStrategy is over-leveraged at current Bitcoin prices? Ask. Want to know if the 200-week moving average on the Nasdaq is about to hold again? Ask. This is your show as much as it is mine. A quick look back at history to remind us why all of this matters. 2008 showed the world that central banks will do whatever it takes, trillions in QE, zero rates for a decade, corporate bond buying programs that would have been unthinkable in 2007. 2020 showed that governments learned the same lesson on the fiscal side, trillions in direct stimulus, universal basic income experiments, debt monetization in real time. Japan has been running this experiment for 30 years, endless QE, yield curve control, fiscal deficits averaging 8–10% of GDP, and yet the yen still hasn't collapsed and deflation keeps coming back. That's a warning and a playbook all at once. And Bitcoin? It went from literally $1 in 2011 to almost $70,000 in 2021, while the Fed's balance sheet expanded from $900 billion to $9 trillion. That is not a coincidence. We are living through the biggest monetary and fiscal experiment in human history, and the outcome is still being written. My job is to help you read the chapters as they unfold, and position yourself accordingly. So if you're ready for that, do 3 things right now. Smash the subscribe button. Hit the bell so you never miss a Wednesday upload. Drop a comment below telling me which of the 6 pillars you're most excited about, or what burning question you want answered in the next video. Next Wednesday we kick off the Real series with a full breakdown of the Federal Reserve's latest meeting, the December dot plot, Jerome Powell's press conference, and what it all means for risk assets going into 2026. You won't want to miss it. Thanks for watching Magic Money Macro. I'm Steve, and I'll see you next Wednesday. Let's go win this week.